In this section, we're going to talk more about all the indicators together. We want to see what indicators exist in MetaTrader: trend indicators, oscillators, volume indicators, and Bill Williams indicators. Let's go over a sample of each together and see what they're like. Well, as you can see in the Insert Indicator section, we can access the Trend, Oscillator, Volume, Bill Williams, and Custom sections. In the Custom section, there are also some indicators whose default settings have been modified or personalized, and they've been placed here as well. Well, another way was that we could use the shortcut here. Trend, Oscillator, Volume. We can see all of these here in the Trend section. We've already talked about moving average, we've talked about Bollinger Bands, and we've talked about ADX. We've covered Ichimoku, we've talked about parabolic SAR, and now we're moving on to envelopes. In this indicator, the period is set to 14, and there are different levels. We've set the colors to blue and red, and its default degree of freedom is 10. When we set it to 1/10, we can see, guys, just like what we discussed about Bollinger Bands and how they work. Here too, this indicator works somewhat like the Bollinger Bands themselves, meaning it basically has an upper band and a lower band with a certain degree. Its range is set in such a way that it shows overbought and oversold conditions, so we know that when it hits the lower band, it indicates a kind of oversold situation, and when it hits the upper band, it signals an overbought condition, which, if it breaks out, can also be a continuation of our price trend in the settings. What we can do is we can bring it to the degree setting. By adjusting its degree of freedom, we can look at it more precisely. Guys, if I feel that if it gets a bit tighter, it can give me better signals, what do? For example, I set its degree of freedom to 30 or even 100, all of it. See? It got much closer to the chart now, and because of that, I can get much better and more reliable signals from it. See right here? Where it touched the line and then bounced back up, I was able to get a clear signal from it, and this exercise is just to help you get familiar with how the indicator works. As we said before, we never work with any single indicator alone in our strategy. Another one of the trend indicators that I think is left. Yeah, the standard deviation indicator. We can use the standard indicator here and set the period to 20 and click OK. What's happening here compared to the zero line is that it shows us the volume we see in each movement. For example, here when its period is set to 20, it acts like a 20-period moving average. So whether we're on a 20-second chart or a daily chart, it works for us as a 20-period indicator. What we can clearly observe from this chart is, for example, when a substantial amount of trading volume has moved out of the market. Here too, during this specific downward drop, we can see that a large volume has exited. In the following sections of this course, we are going to discuss all of the most commonly used technical indicators in great detail together. For now, let's just take a look. So, do we not have any more trends or anything else? In the oscillators, we have MACD and RSI. For example, we use the music on IMU. In the RVI, guys, there is a group of indicators like RSI, RVI, CCI, and stochastic. In these indicators, we have a series of overbought and oversold signals. That's basically how they work. They are all similar in that a specific range and a certain number are considered for oversold conditions. And a number, for example, from 70 to 100 is used for overbought, meaning they all work on a similar basis. Generally, we see divergences or hidden divergences on these indicators. They don't have many different defaults from each other. It's important in which context we use each of them and how we make them effective there, or what kind of confirmation they give to our analysis. Now let's get familiar with a few of them. Look, guys, RVI consists of two lines that cross each other. These two lines can signal each other, for example, how? Just like we talked about moving averages, when the moving average here, the green one, breaks above the red one and moves from the negative zone to the positive zone. Here, 0 is our reference point and it's moving as well. Well, we know that there's a decline happening here. It comes to an end and starts going up again. You can see it here. Guys, look. Here, the price drop was very small, but the drop to 0 was significant. Here, this upward movement is not comparable to that previous rise. That's why I say we need to know where and how to use the indicator. You can't just trade based on the fact that this is moving up and down and giving you divergent signals. But for example, when we say we should do analysis and start trading based on our analysis, what does that mean? It means, for instance, if we had a downward trend line here and this was the point where our trend line was broken. Exactly at the point where the heads of our two moving averages have turned upward and there's a crossover down here. And here it's breaking the 0 line and moving upward. Has the music indicator really managed to give us this buy signal? We already knew we wanted to enter here. Our trend line is broken. We have a breakout. We have a pullback. Our internal resistance is gone. And here the RVI signal is useful for us if we are using RVI in our strategy. Let's get familiar with another one of these indicators. Guys, when we right click or left click on them, now in the software, the first section is for properties and settings, and there are two options where we can delete our indicator. One way to delete my indicator is after I've added it. I'm telling you, I set RVI, RSI, momentum. With the default period of 14, we click OK and the momentum runs. Guys, momentum is more because we need it to identify the trend. It really helps us. For example, look here, in a trending market, we stand by and see how it works. Momentum, you've probably heard about price momentum many times and in many places. How is the market's momentum? Its price momentum is either above 100 or below 100. I should also tell you that it has a 100 line, above 100 and below 100. The 100 line is for, it's very important for us. Look guys, this decline that started here, right from here, its price momentum broke downward. In this rise, look, we've drawn our trend line, right? And here, when the upward movement starts, it breaks our trend line. Exactly where the price momentum comes up from below, it breaks through our barrier to the upside. Well, this can be useful for us. It can also be a good momentum signal for us that an uptrend has started. But when we don't have any analysis, for example, here we have an uptrend, but nothing has been broken here. So does this downward movement of momentum have no significance or value for us at all? That's exactly what we always say. First, analyze, for example, an internal resistance where it has broken through and momentum has also given a signal. After that, at the very least, with price action up to its own ceiling, you can get a good profit from it with a short stop and a single take profit. It's really good to understand that at the very least, if we had risked 1% here, we could have made at least 5% profit here again. Okay guys, another way to remove the indicator is to right-click on the screen and select this part called Indicator List. Of course, you can also do this using the shortcut key Ctrl+L. This page will open and you can select the indicator you want, edit it or delete it. That's how we do it. Now let's move on to the next indicator. In the indicators section, under oscillators, we have MACD, RSI, momentum, and for example, stochastic. As I mentioned, it works between two levels. It operates between two levels. Look, guys, one of the stochastic levels is 20 and the other is 80. These are its two default levels. Of course, when customizing, we'll show you how to change this, and again, this is done with a cross. Does it work with two lines? Guys, if you want to know what these lines are in any indicator, when you click on it, in its properties section, in its parameters, it says there's a K and a D. The K percent is currently set to 5, and the D period, the D percent, is set to 3. So it has a D and a K, and those are crossing each other. They operate in such a way that K and D, whenever they cross each other from below to above, just like we talked about in the stochastic indicator, it can be a buy signal, and when they are in the overbought range, which here is between 80 and 100, this is our overbought area and here is our oversold area. Now, how do you get signals from this? In the strategy, you need to see what you're matching it with. But for example, if we draw an internal trend line here it breaks. What is our internal trend line accompanied by? Here in this stochastic indicator, when we look, we see that it has reached the oversold area and crossed. We have both of these cues together, and here it gives us a buy signal. You see, we were able to ride it nicely up to here. Let's look at another example of this. For example, the points where we ourselves want to analytically confirm our trade. Look guys, here we actually have an internal resistance line. This internal resistance line has exactly reached the oversold area here. The cross has happened, we've come above the 20 line, and here is where our trend breaks. With this, we were also able to see the signal up to this point. We used important indicators within our strategy. In general, we explained how its default works and how to customize it. But for familiarity, for example, bull power and bear power show the strength of bullish and bearish candles. ATR, for example, what does ATR actually do for us? Let's remove this. ATR, for instance, when we're on the daily time frame, we usually look at ATR in its daily form. That is, we want to see how much momentum the market has to move from where we are right now. How much strength does the market have to move from here? For each pair or commodity, it writes its own ATR value here. On the daily, for example, we can see it. Guys, when the ATR reaches this peak, it means that here the ATR has completely passed its range. Look guys, when the ATR reaches this level here, it means that this amount of ATR has already shown enough downward strength, and beyond this, the ATR, meaning the range of movement, can't go any further. And after that, it started. The ATR has changed. For example, we don't want to look back and see anything about the ATR. Look guys, here we can see that when it reaches this level, the ATR is already full. The ATR is in a way an average in music. It's used to measure movement from the very point that exists. Generally, as I said, it's seen on the daily chart, and here, this movement is already complete and it was clear that a correction would happen. Why? Because the ATR was full. Another oscillator that we have left here, for example, is the oscillator. We want the CCI. Let's talk about the CCI. Exactly like the stochastic, like the RVI, like the RSI. This one also has two ranges, but what's the difference in its ranges? It moves correctly between 0 to minus 100 and plus 100, meaning it moves between 0 to 200, from minus 100 to plus 100. It has a zero line and its oscillation range is about 80 to 90, right between minus 100 to plus 100, about 80 to 90. And generally, it moves very little at the top. You always see divergence in the CCI, always compared to the CCI's internal trading volume. We clarify this in the mistakes. Now, whether it's buying or selling, but we'll talk about the best indicators within the strategy. Here, let's talk a bit about the volume indicator. The best volume indicator, the first one we want to look at is the volume indicator itself. Guys, here we see bars, green and red bars. The green ones represent buying volume and the red ones represent selling volume. So if our candlestick is bullish, the green bar shows its volume, and if our candlestick is bearish, the red bar shows it. Usually, in divergences, volume often helps us, or when we're scalping. We go to a lower time frame and, for example, look at this candlestick. Guys, there was a drop here, exactly a drop up to this point, and here is where we started to move upward. This candlestick, which marks the first upward move and is supposed to confirm it, has had a very high volume. When we see a large volume in the market, we naturally assume that the buyers have started very strongly and are going to support the price nicely to the upside, right? But look, this one that has the highest volume, notice that it started from down here. And above all, this one is much bigger than the others. It's for this candlestick. Candle by candle, these volume bars move together. This candlestick is the reason why we have a trend line here. It broke my trend line after we saw everything. It broke my downward trend line and my internal resistance. And with this strength and these tools, when we say a powerful candlestick closes above, it pushes higher. It breaks as a full-bodied candlestick and does it as a full-bodied move. And here we can expect a really great profit from it. The other types of volume indicators that exist are like this as well. For example, MFI. MFI is also based on price. In this way, it shows the volume of the matter, reflecting the entire price in relation to the volume being used. That means here we are seeing supply and demand in relation to prices. On this side, we are seeing the volume that is behind them. Each one shows with what volume and what strength the buying and selling is being done. The range of its effect is considered between 20 to 80 or 100. And as I mentioned, many of these oscillators and indicators operate within the overbought and oversold range. Here, where it has entered the overbought zone, is exactly where it hit this peak. Here, this peak has come down lower and formed a double top. Later, in the patterns, I'll explain to you what a double top is. But this has come down lower than this peak, and this is the trend line. We can see that it has broken the upward trend, pulled back and dropped, and we could clearly see this from this volume indicator. Let's take a look at it. If we want to move on to the next indicators, after Serendia and Oscillatoria and Blue Music, we come to the sound of Bill Williams. Did Bill Williams himself create this series of indicators? Like what? Like fractals. Guys, if you add the fractal indicator, once again, let's go into the indicator settings themselves, where we can choose the color of our fractal and select its thickness. The time frame tells us which fractal to display. We select it, hit OK, and I'm going to delete the previous indicator. I go to the indicator list. I want to remove my MFI as well. I press delete, close it, zoom out a bit. We want to, in the overall view, you can see what the fractal looks like. It appears above the swing highs and it has marked some points below the swing lows. Where does this help us? For example, in our strategy, we said let's trail our stop, meaning we can move it up swing by swing. Sometimes we run into trouble when we can't properly identify the swings. We don't know if a swing here is confirmed or not, or what has happened to it. The fractal really helps us here, especially when it's not clear even when zoomed in. For example, I came and in a certain trend, I see what has happened here. I did my simple technical analysis. For example, I say, let me mark a major internal resistance for you here. Then I say, that's the internal resistance line. Here I see that it has faced a breakout. Do you see? It's clearly broken and the market has pulled back to it. Do you see that, guys? The discussion we had about pullbacks, one type of pullback was that when it breaks and goes up, the price doesn't necessarily show a reaction to the exact line it broke, but the first return toward the price, that's the pullback. Okay, so our pullback has happened here. So what's supposed to happen? Here, for example, we came and set our stop loss down here. Where is our entry? For example, our entry is here. Now the market started this move and began forming these fractals. What's the first thing I can do as these are being formed? It's that if I show my stop loss here with a line, as soon as I see the next fractal, I can move it and place it there. Under the next fractal, you see I moved it here. From under this fractal, I moved it. Under this fractal, again, the price started moving. It formed a bottom, then went up again, hit its high, and continued. What can I do again? So I can move my stop loss under the next fractal, as they say. I follow the market. I trail swing by swing so I don't fall behind the market. All right, guys, it formed this fractal pattern right here, didn't it? Now, what exactly do I need to do? I'm just going to come back and pick it up once again. I also move my price under the next fractal, just like that, fractal by fractal. I can actually keep all of them tucked away right under these complex fractals. As you can see, I'm bringing it over here. First, I brought it to this specific spot, then over to this one, and then carefully under each one individually. Now, what I'd like to do is move these specific pieces over to here and then over to here as well. Guys, I'm still trailing the market, not setting a take profit, just continuing fractal by fractal, until eventually the market price action comes down below one of these specific fractals where I originally set it. It breaks my fractal level and unfortunately hits my stop loss. Look, let me zoom out a bit further on this chart so you can see the whole picture more clearly. Guys, I was able to follow the market trend all the way from here. It was very easy to do, moving fractal by fractal. Now, what exactly was I able to achieve by doing this? I was successfully able to follow the market's movement, and as they often say in trading, I managed to trail my stop loss effectively. You can see exactly how it works just like this in the example. My stop kept trailing below each fractal like this and moved higher, and I was able to get more profits from the market up to the point where the fractals became horizontal, meaning the market went into a range. Here the market stalled for me, and now the market is still there. It couldn't really break through much anymore. Now what happened here is this. Instead of simply having my stop loss placed right here, and for example, deciding to take my profit from the market at this specific point, in a more detailed price action manner, let me quickly change the color for you to make it clearer. So instead of just saying I'll take my profit here using standard price action analysis, I might look for a much more strategic exit point. I was able to use the trailing method. All the way up here, I was able to secure about 15 or 16 more pips from the market. Okay, so this is one of the really useful ways we can use the fractal. Now, if you want to delete it, what do? CTRL-B and CTRL-A. We select all of them and press delete. If we want to remove the fractal indicator from the screen as well, we said right click, go to the indicator list, select fractal itself and delete it. Let's zoom in and get back to it. Alright, so what's the next option in Bill Williams? For example, let's go to Awesome Oscillator Alligator Oscillator towards Hoted Nordin, Schomerkoda Zalmit. And so on. What do we call this? AC oscillator. It's the same thing in the AC oscillator. These histogram bars are very similar to what? They're very similar to the MACD indicator, which we'll talk about in detail. In this one too, we can easily find divergences with respect to them. Can you clearly see exactly what happened in this scenario? Here, there is a classic double top pattern forming right here, and this is a slight bearish divergence on the indicator. It eventually broke downward, and we can use these specific signals, along with the strategic trading setups we create, to take full advantage of them in our daily trades. Guys, what's important here is that all these indicators, for example, the awesome oscillator, all the phase changes, for example, of the AO. In this way, just like the MACD that we used to work with, it gives a series of phase changes. For example, in the Andrews pitchfork strategy, these phase changes are very useful for easily identifying the swings we want to use to draw our Andrews pitchfork. Sometimes, guys, we want to use the pitchfork. We want to work with Andrews, but we don't know how to use the Andrews pitchfork. From which low to which high, and which low for an uptrend, or which high, which low, and which high. To draw our downtrend, we use two aids. The first aid is that we add the zigzag indicator so it connects these swings together. Our second aid is these oscillators, which tell us during phase changes that your swing has shifted. It depends on which strategy do you want. Which indicator should we use? In all the strategies we teach you, whether it's strategies that are popular for trending markets or strategies that are popular for sideways markets. In both cases, we get to know a number of indicators more thoroughly, and we basically dissect them. We examine their details very closely, almost like analyzing music note by note, and we learn how to use them, alongside the technical analysis we do so we can achieve more accurate results, or get confirmations from those indicators. Welcome to the future.